Good afternoon, everybody. This is your host, Yanadi Kuruwa. Yeah, let's quickly about engulfing engulfing pattern. Engulfing pattern. Before we go there, we have to tell you the different types of must first familiarize yourself with the different type of engulfing. How the varieties of variations of engulfing pattern. So when you see engulfing, you can easily recognize them. If you are still go back to the manual, it's inside the manual, you can get this in there. Yeah. Then you have this pattern like this. It could be three candle covering up just one candle. It could be two, it could be one. It has variation. As long as you have a complete set of candlestick in the same manner, in the same pattern, could bullish or bearish, covering up the first one. That's an engulfing. But in the situation when this fails, what happens? In the situation when this fails, what happens? This is what you may like. If you get something like this, you get something like this, this is a engulfing, right? This is an engulfing. This was the previous bullish engulfing. This is the previous bullish engulfing, right? We have this as previous bullish engulfing that create a support level. Create a support level here, right? Now, price came in. Can you see the three consecutive? These are the three consecutive bearish candle that runs consecutively. No bullish candle in between. As long as we have the first candle, 1, 2, 3, that runs down this bullish engulfing, this is that close below it, that's a change in structure. So we now time this as a failed. We've timed this as a failed engulfing. So which will be flipped for or exchanged for sell. So we now say support has become a new resistance. Once this level of support of previous engulfing pattern has been taken out, it now turns a new resistance for selling. To turn the new resistance for selling. So that means this is a broken engulfing or failed engulfing or flipped engulfing, whatever terms you use. So as long as this is broken below, it's a failed. The engulfing has failed to move higher. Because the purpose of this engulfing is to move price, move it higher, right? But it failed at the top. It failed. So we have something like this, like this. So it failed. It's a failed engulfing pattern. So you now see a retest. After a retest, then you have this thing. Now the other part of it is, so that means if you were buying, you immediately change to selling once you confirm here. Once you confirm, because this is the previous. This is supposed to be a previous buying zone, right? For price to move higher. But it was taken out. It was taken out. Probably it hit out your stop loss or thereabout. If you are an aggressive, you've been selling aggressively, it hits you out here. But when you see a close below it, you quickly change your direction. Try to cover up your, your small losses and still be in profit. So now this is the opposite side of it. This happens to be what? This happens to be a bullish, a bearish engulfing pattern, right? Which is the purpose all to have this selling down. Be selling down. That when price come back to it, we want to sell down, right? But price moves higher to break above the resistance created by the bearish engulfing pattern. It breaks and close above it. That's a change in structure. So if you wanted to sell here and this zone has been taken out, You were supposed to sell inside the zone, right? When price got back into the zone, you were supposed to sell, but it was finally taken out. Instead of it coming down, it will retrace, then push higher. That's the new buy. So we now say support. This resistance has now turned a support. That is the logic behind the failed engulfing pattern. So that's how to identify a failed engulfing pattern. And what happens when a engulfing fails? What happens when engulfing fails? It becomes an opposite trade for you. That means if you were to buy before inside the zone, then the zone is being taken out. So you now resolve to sell. You are no longer buying. You will sell. So you sell. If you were to sell inside a engulfing zone and it was taken out, your resolution now would be to do what? To buy and not to sell anymore. So when engulfing fails, you still have a trade. So it's not a matter of giving up on it. When it fails, you change direction. So I told you in the manual that you can use engulfing to mark a zone. You can use it to confirm a setup. You can use it to confirm a zone or to confirm a trade setup on the zone. You can use that as an entry confirmation. It can also be used to mark a zone. Yeah, to mark a zone. So let's go back straight to the so we see different trade example here. Like for example, this is a volatility 75 indices. You can see a engulfing here. This ought to be a bullish engulfing pattern because it covers this. This is a bullish engulfing pattern. So if you mark up this zone now and it goes up, right? I mean, it moved higher, right? But it turns to be a what? It turned to be a failed engulfing pattern because it was taken out here. It was taken out by this stronger move downward. It was taken out. Now price returned back to it. So this means this creates another what? An engulfing zone again. And see it, which you were supposed to sell if price come to this place and retest back downward. You were supposed to sell, but it was broken out too. So it's a continuation of this. This is just a fake breakout. It was a continuation of the probably it's coming from this that rejection zone. When you see that longer wick, it indicates a hidden zone. Or when you see this this is a hidden engulfing pattern. It's inside the manual. If you refine it to a lower time frame, like 1 minute or 5 minutes, you will see something like this. You will see something like this. So this now becomes what? It becomes a zone. From price tap it to it moves higher. So this is exactly what happens here. But it was hidden under this particular time frame, which is 15 minutes. So that means if you go lower, you're able to get that. So let's go straight to the subject matter of this section. Now, it was taken out, right? It was taken out here. It was taken out. And price come back into the zone. This is a government zone. You are to buy. And price move up straightly. Then here, you can see that here too, we have what? We have our another failed engulfing. So you can use engulfing to trade back to back. You You can use your scalp, especially if you're an intraday trader. If it fails at the top, if it fails at the top, that means it's going to do what? It's going to buy. When it fails at the bottom, it's going to sell. Here, it failed at the top here. This is this is supposed to be a selling, right? But it moves higher. Instead of coming down for sell, it moves higher above the zone. It was broken out here, and price came back into the zone and starts moving higher. So that's a engulfing pattern when it fails. When it fails, like for example, here too, we have another one here that failed to move higher. This was supposed to be what? Supposed to be a rally here, right? But we didn't get a rally. Rather, we get a failed rally there, right? Price failed to push higher. It came back inside we made a kind of a this thing, then push back into the zone again, but it could not go higher. So it started coming down from the zone. As long as this place was not taken out, the highest high here was not taken out, that becomes a weak buying to buyers who ought to buy above this place. Because this high is responsible for sellers, for selling to push against buying. If this move created a new break of market structure like this, if it created a new break of structure, that means there's enough volume or pressure coming to buy. But it didn't. But no move above this place. So this now becomes a confirmation. This now becomes a confirmation for what? For a failed bullish pressure, for a failed bullish move, right? Above this place, now become a pressure. So here you are going to circle out this place as a zone, and then when you see a price coming down, failed here, you sell. So when a bullish engulfing fails, you sell. When a bearish engulfing fails, you buy. Like what's up here? You buy here. Here, right? I see here. So if you trace downward like this, you see a breakout, then a kind of this inside. Yeah. So we have these two as what? As another zone that was broken out here. Then price pull back to it. You sell. So these are your buy zone, buy area, the selling area. Then we have another one here. Can you see this? This is a failed engulfing. It was broken out, then price tapped into the zone. This is a failed engulfing. Sorry, this is a failed. It's not failed, it's not failed because it has not been broken below. Yeah, price tap into it. But this is a failed. This is a failed what? This is a failed. No, that's not failed. This is a failed one. I wanted to do. I mean to do this one, this particular one. Just mark it. You mark it like that. Then, so price is supposed to go higher. Bounce from here, go higher, but it turned downward. Got into this place, will not move nowhere anymore. This place, this segment zone, push it higher, push it higher, push it higher. Push it higher. So that's how to trade. That's what the trade example, how the power of engulfing in a trade. So when engulfing fails, you trade in the opposite side. That's the essence of this lecture. You trade it in the other side. So that is the facts there. So when engulfing fails to hold its zone, and what happened here? See what happened here. See what happened here. And price move downward. Price move downward. This is supposed to be a rally, right? It's supposed to be a rally, but it turns to be a sell. As this was taken out, this engulfing pattern was taken out. Then we have another one here too. It was broken above. Price coming and created a new. So you can see a counter move there, a new engulfing zone. Yeah, which is responsible for the taking out of this support. So we no longer have a strong high because it has been taken out. This become a weak high. Why did this become a? But it has been taken out here. This now becoming a new strong high. A new strong high. A new strong high. So as long as price does not move higher to take out this place, so this place will maintain its strong position for sell. You may say it's strong position for sell. And you can see here too, here, it was broken out here. It was broken out, then price turned into it. This is a daily chart, or supposed to be daily chart. If you go lower, you see the retracement, they pull back very well to buy into it. So price move higher. And later on, you can see the bounce here, exactly right at the resistance area of this and price bounce higher to this place. The opening of this is a opening of a new market. So that's how to recognize engulfing. When engulfing fails, I told you when a bearish engulfing fails, when it fails to hold, when it dissolve fails to hold, price will move and break out of it. Then you wait for a retest of it to do what, to buy. Wait for a retest to buy. We'll see some traders in there. When bullish engulfing fails, price break below it, taking out the DC. So your action is to wait for a retest into the zone and sell into the new trend. That is for the introduction. So we quickly go into some trade. Why I Yeah, so let's see some live live trading here, right? Now, if we mark this as an engulfing zone, right, and we want price, we've marked almost about 1, 2, 3, as our engulfing zone, right? Here, price move is supposed to come in back into the zone. Price move, it got retested here. You buy above, got retested. Then let's see what happens at the top of this place. You can imagine this place is a zone, right? It's a zone. It's a zone. This place, can you see it? It's a zone. It's a zone. So it will have, this is a daily chart. It will have an impact in this place. So we expect price to start coming down here. And because if you look earlier on, the trend is what? The trend is down. Lower low, lower high, lower low. That's what we have there. That's the trend. The trend has been down. It has been down. So prices will still maintain that structure until broken out, once it's taken out. That structure is taken out. So now here we have the lower lobe being broken below. Then we have this engulfing zone. We have this engulfing zone. So this engulfs this bullish guy. 1, 2, engulf this. Then we mark it out as a zone, and price got into it. So you mark all these places as we are going to be using for what? For sell. So you don't sell until when the last leg of this thing is taken out. This is what this is. This is so this is a bullish engulfing pattern. A bullish engulfing pattern, because it covers the body, right? A bullish engulfing pattern. Now, price pull back into this thing, then it's supposed to go higher, but because of this is a strong zone, right? So we expect to sell and not to buy, right? So now we want to see a failed this in here. It was taken out. The bullish engulfing pattern was nearly going to be broken below. That's what we want to see in order to sell into it, right? Because our initial this was to sell, right? But you must wait for a change in structure. What is the change in structure? When you have something like this. When you have something like this, is a bullish engulfing, right? This is a bullish engulfing. Which is this resistance of the area of it. This is the support area of it. Then price came down to take it out like this and went straight into the distance. So your own is to do what? Is to sell. When you see this a change of structure here, the change of structure is to sell because this support has been broken below. The engulfing zone has been taken out. And the confirmation of the close below it has been taken out. So get that behind your mind. So so we want to see the next candlestick to break below this zone. To break below this zone, and imagine, so it was taken out. So this place was taken out. This small engulfing pattern was taken out, right? And price do what? It was taken out. You can imagine if you put you want to sell here, you put your this in there, your stop loss probably around here. Then your take profits could be this place. So you already gotten almost about how many pips there at the retest of it, the retest of this place here. You got almost about 251 pips in a single day. Got almost about 251 pips. And price continues to move, taking out this engulfing zone. This is another engulfing zone. So we want to see this be taken out too. Can you see it? So we want to see this be taken out. Let's play it forward. So we want to see it be taken out. So once an engulfing is broken below, it calls for a change in its original storyline. It calls for a change. That means you were to sell before, so your confirmation is selling will start from here because this place has been broken below. This is an engulfing. It's a bullish engulfing pattern, right? Instead of this thing to move higher, it start coming downward. So this become a strong high. So this is our this. So this is the sell area, the sell point. Then this will be your stop loss. Then cover enough pips. You are moving down with almost about 378 be secured. So that's how to sell into that change in market structure. Then it's coming down to this one. The next one will be this. The next point of this thing will be this. Your next target will be this. Inside this zone, it's another zone. We want this zone to be taken out because we were in a bearish market structure, right? So we want to see more sell. Continue. You can move your DC. You can move your DC, your stop loss. Move your stop loss. Close it. Gap. Let it close. Then you move your stop loss to a break-even point. Then allow this your profit to be running. You can move it. You can move it. You can move it. Up like this place. Because of this, or you exit. If you have like a 5 trades, you exit like 3 out of to to hedge your risk. Allow the rest to be running. So you extend your stop to take profits. You can extend your take profits. So you can extend your take profits now to the last zone there. So we now play it forward to see. So once you get this is a breakout of this structure, right? And price retraces back into it. Price retraces back into inside the zone. So you are using all this area to sell. To sell. You are using this area to sell. To sell more, to sell newly. Put your stop loss there and sell and add more sales. You add more sales. This was taken up because it's reacting to this zone. So, but because we already have another this thing that is created here, we already have another this thing that is created here. We already have another engulfing zone that is created here. This is a new zone that is created here. So we want to see price into this zone, then comes down to take out this low. So you set up another this thing there. Then your set another cell. And price has already moved about almost about 303. We have a 303 pips in a new cell, plus the initial this. You can imagine what you are securing there. I see that if you look at this place too, that's an engulfing too. That's an engulfing. It's an engulfing. A bullish engulfing pattern. A bullish engulfing. I see it? And price broke and closed below it. So you continue to use that sense, that mentality to see a change that this is because this place does not move higher. This place, as long as this place does not move higher to cover up, to break through this internal higher high. As long as it doesn't move higher. So this is an internal higher high created by this pullback into the zone. Then this one is the external lower low. So as long as price does not move higher to take out that this high, right? So it's an indication that more selling will come to place. It's an indication that more selling will come to place. It's an indication. It's an indication that more selling will come to place. So as long as you continue to see more close below a new form this thing, you are taking action. You are selling more. You are selling more. And you can imagine this major one, internal this thing was taken out too. But those barriers, internal engulfing pattern that was responsible for the pullback of this structure were taken out. They were taken out. They were being taken out. So you were selling more. You were selling more, and you've covered almost about how many pips from here to this place. is 700. Can you imagine 712 pips? Then in between you have a new cell, which is from here to this place becomes what? Becomes 359 pips. You can imagine plus that's 752. That is huge. That is huge. So you can see the power of engulfing. No indicator, no this in here. Just noting the engulfing being filled, then take advantage of it. If you see a new strong high, you use it as your selling zone. Put your stop loss above the zone and sell downward. So we are looking for price to tap into this place and now move higher, because this is the final, this here. This is the external low. So it has come into the zone. Let's see what happens there. Connection is slow. So you can imagine that. You have a good sell into the zone. So there's going to be a bounce of this zone now, because this is the last leg. This is an external low. Your price will move from the external high to external low, back and forth. Yeah, yes. So taking out the internal structural highs and low, which I'll be taking out here. 1, 2, 3. There are barriers into selling here. So price has taken out. The first barrier was taken out here. Second barrier was taken out. Third barrier was taken out. Then this was taken out too. Fourth barrier taken out. So you quickly do what? You quickly close your trade. If this place is broken below, then you put up a new sell. Let's see what happens there. You can imagine we have another sell here into this zone, because this is still under the failed engulfing zone. Can you see price broke through it with this also together, and we have a pullback into the zone. So you sell here again, then you see another good sell. You're going to add more cells as you are getting more confirmation. So you are getting more confirmation from that place. You're going to see more cell here. Yeah, it's another cell. Another cell. Another cell. So the arrow pointing now as selling point. Yeah. Another cell that break below this thing. So we want to see more cell, because this major key level of that engulfing has been taken out. So this become a major setback, right, for those that ought to buy here. If you got this knowledge, you have saved yourself a lot. Yeah, because this place will push down this. It doesn't allow this to go up. It's a strong barrier here. We have one here. We have another one here. That is causing this place to pull down. A lot of strong barrier. Can you see the congestion here? So there's a big congestion there. So it's causing a traffic. It doesn't have the power to move, to break through with just a big volume. So we are saying it's not low volume here because of what? Because of this congestion here, traffic, right? 1, 2, 3. It's facing 3 major traffic there. So price will not move higher. So we call this as when you have something like this, that's a congestion into the zone, compression into a particular zone, and you see price move down. Yeah. So that is that. That's how to. Then you want to enter a new cell. You enter a new cell there. Enter a new cell. Enter a new cell. Or that is zone. This is the zone. This is the upper zone of that failed head stuff. Targets. going to put more sales. I imagine want to put more sales, and then once price break through it, move your DC, close your, your stop loss, make it tight. So you secure another good stop. That's the 504 pips, 504 pips secured. So you have your, so that's the end of this. Probably you go back and see if there's a other in a higher time frame or thereabout. So that's how to buy or how to sell into a failed bullish engulf pattern right from this place. You can see it right from this place. This is a daily chart right from this place. So that's how to sell. And so let's look at buy. Let's go and look at the example of buy. When next we'll come back, we'll do that.